Welcome to the daily update. This is being prepared Tuesday, April 5th, where we'll look at the action in the market today and then see how things look for Wednesday, April 6th. And the follow through buying that we needed to see on Tuesday just did not happen. In fact, we saw a pretty fast pace of selling going on. And that really has weakened our technical picture and has switched things more to a negative stance now. So let's go back and recap what happened. We did have a flat to lower open. Again, as I explained in yesterday's video, I watch the open, but I don't pay an awful lot of attention to it. But after things kind of got open, we saw selling go down to S1. And then as the day went on, we kind of bounced a little bit between S1 and S2. But then finally, later in the day, prices ended up breaking below S2. And that's when things turned more decidedly negative at that point. We closed near the low and we were down 1.26%. Volume continues to be below average. And as I mentioned, our technical picture is weakening. It's not full-blown negative, but it's getting weaker. Inflation still is the main thing. The report that came out on Tuesday showed that yeah, it was even lower than expected, but part of it showed a real increase in inflation. And that sent interest rates a lot higher. We also had some Fed members speaking, and that kind of freaked out the markets in a way. And so interest rates really started to go up. That sent stock prices really down, which is one of the scenarios at the end of the video that I go through. That's one of the scenarios that we were watching for. And that was played out on Tuesday. Of course, the geopolitical concerns that are going on. And then we're still dealing with all these inverted yield curves, as well as oil supplies. Okay, so let's make some comments. The technicals are weakening and interest rates really rose sharply. And then the Fed giving some speeches that really spooked the markets. The love that we saw on Monday, it's gone for tech stocks. What they gained on Monday, they gave back most, if not all of that on Tuesday. We're now in a very short-term range. And when I bring up the charts, you'll see that what's interesting is that the small and mid caps, they're going down when the rest of the market goes down. But like on Monday, when we had the up day, the small caps and mid caps really didn't do anything. So that's something a little more negative, at least in the short term. The S&P fell back below its 100-day simple moving average, and the NYSE and the Wilshire that had been holding up fairly well, they're back under their 200-day simple moving average. And the VIX, which had declined below 20, that's kind of the line, the static line that we use to determine whether we're more complacent or fearful. We dropped below 20. Well, on Tuesday, we went back above 20. The report that came out was the ISM non-manufacturing index. And this was a little lower than what was expected as far as the report itself, but the prices paid index, that was very high. I think it's like the second highest reading in history. Again, I don't put a lot into that highest since 1983 type stuff because yeah, you're not talking about context. But it was a very high as far as inflation is concerned. Current market valuation still has things at fairly valued for the S&P. And our trend, it's still positive. It's hanging in there, but it's weakening. And the ADX is continuing to drop. Because we had the pretty solid down day on Tuesday, our bias is negative. And going back to last Thursday, I've switched the momentum over to negative now. So let's go through the day's session. First, let's look at sentiment. This is kind of interesting. We didn't really see a move. We were at 52 yesterday. Well, we declined to 51. So even though we saw a decline, the fear gauge really didn't move all that much. So what would have helped would be for this to go more over left and then possibly to get more to an extreme fear reading. Now, this could mean that people are not really bothered by this right now, and they just see this as a short-term decline before we're getting set to go higher. Be careful if that's the scenario. If that's the conventional wisdom, the stock market will quite often want to do the opposite of that. It could end up doing that. We could bounce higher from here. There's nothing to say we can't. And the positive backdrop that I've been talking about in a lot of the different videos, that's still in place. And so we do have some positive things to look forward to, but we're not seeing that in our charts yet. So we can't really put that as part of our scenario. And then here, it just shows that we're midpoint as far as fear and greed. Here's where the VIX, it dropped below 20. Well, it bounced back above 20 on the line chart and also on the bar chart. And then the VIX of the VIX also saw a spike, both on the line chart and on the bar chart. The UA, even though it's coming up, this is the ulcer index. And when the markets are falling, this goes up. Well, it climbed a little bit, but not at any kind of an extreme reading right now. This fits more into the fear and greed index that I just talked about, where people aren't really freaking out yet about what they saw on Tuesday. It's if we see follow through, that's what's really going to start to shake people up. Since we had a down day, we had discretionary down the most, and then tech. It seemed like the love they saw on Monday was gone on Tuesday. It lasted about as long as a seventh grade relationship, it seems like. Energy was actually down a little bit. There were a few sectors that were up slightly. Real estate staples, healthcare, which have been getting kind of hammered lately, and utilities, which have been doing very well. They were probably the strongest, they were the strongest sector on Tuesday. And here's what it looks like with energy still in the lead, even though it's pulling back a bit. We have discretionary still in last place, and then communication services and tech. Those are kind of the big drawdowns as far as the sectors are concerned. Here's our tech sector chart where we're still above this moving average, even though we declined over 2%. We're still maintaining some support right now with the moving average. As far as inflation, the CRB was up slightly, but we're still in an overall uptrend. The CRB compared to the S&P, it advanced 1.44%, so it's still in an uptrend, showing that inflation is outpacing stocks right now. That's kind of a very general, generic view of this. And here's just the opposite, showing where the S&P has really been underperforming commodities, especially since the beginning of the year. Our technical alerts, a lot more negative than positive. We had the industrials that had a bearish MACD crossover. The NASDAQ fell through 14.5, then 14.4, 14.3, 14.2. The Dow went below 35,000. Canada still seems to be hanging in there. A lot of our different sectors saw some negative action, like cyclicals. And then the S&P, and I'll show you this in the chart. I talked about this in yesterday's video where we crossed above 70. Well, now we've crossed below. That is now an official overbought reading. And then the tech sector also crossed below 70. And then the dollar, which is, again, still hanging in there, it sets a new 52-week high. So intraday, we had a little lower to sideways open, kind of, the way it bounces around as usual. But then not long after, boom, we saw a lot of selling coming into the market. We broke through the pivot and made it all the way down to S1, tried to bounce back up to the pivot, dropped below, came back up a little bit. And then later in the day, this is when things finally turned more decidedly negative. We actually broke through S2, but then right at the close, we saw a little bit of buying coming in, and we closed right at about S2. And that was a little bit off of the high for the day. Here's what it looks like on the chart, where we're back in these pink areas here. These are heavy either support or resistance. Well, we're really having a hard time breaking out above that and staying above it. We might break above it for one session, but then we come right back down. Now, are we going to continue to fall more from here? Or are we going to go into more of a sideways pattern? Or are we going to see a lot of strength coming back in to take us back up to these resistance levels? And then down at the bottom, you can see we saw an increase in volume, but it's still well below average. We are down now 5.66% from the all-time high. Growth saw a decline. This is pretty much a mirror image of Monday. Growth saw a decline, value saw an advance. And then here's the ratio between the two, where growth has been trying to do a bit of a breakout here. It's still above the 50-period moving average, but it was down over 1% on Tuesday. And this is also just a mirror image showing where value has been showing some strength, but lately has been showing weakness. And then here's the NASDAQ 100, really underperformed the S&P 500 by about 1%. Here's our value ETF, where it was down slightly, but 2/3%, where the growth ETF, it was down over 2.25%. So value held up better. And then the ratio between the two just shows that growth is stalling back just a little bit here. As far as our trend, this is what's starting to be interesting here. We're seeing buying power decrease, a little bit of selling pressure is increasing, but we're seeing the ADX really declining overall. So this is a weakening trend. If we drop below 20, we might spend some time going sideways. We don't really know that yet. We could really pick up to the downside, but then we would need to see the red line cross above the green line for the trend overall to turn negative, and it hasn't done that, at least yet. Our Arun is also, it's pretty much flat overall. It's seeing a decrease in buying, but also a decrease in selling. So it's pretty much flat as far as our oscillator is concerned. No change with the decision point scorecard. Breadth, this is where we're seeing a little bit more weakness, especially based on volume. We did decline based on price, but we're seeing more of a real decline after hitting that moving average as a resistance based on volume. Our advanced decline ratio is also declining, but still above 0. So that's why instead of saying we've turned negative, we're just showing things as weakening right now. This is more weak, where we saw an increase in new highs, but the overall trend has now turned negative and is flat to slightly down with our 10-day moving average. Accumulation distribution falling a bit, but still positive, but could be showing some signs of weakness. Short term, we're still above the 20. Our short-term moving average study on the 20 showed a decline, 50 a decline, and 200 a decline. We've come back now down below the 100-day simple moving average as far as the S&P is concerned. We still have other moving averages below, which might act as some kind of support if we end up falling. But this game of going back and forth above and below the 100 is really giving us more sideways action right now, and I have to cough. I apologize for that. I'm still trying to deal with this congestion. The MACD is still positive, but rolling over, in the histogram is really showing some weakness. STO is declining based on price and volume. McClellan oscillator, after giving us a real positive reading, we're well off of wearing that off now. We're well out of wearing that off now, where if we see another down day, the McClellan oscillator just might turn negative if it drops below 0. And then this, our Stochh RSI, it was pegged positive, and then boom, we have a down day, and now it's extreme negative. Not quite as touchy this time as the Williams percent are. It is also declining after giving an overbought reading. The force index is also declining. None of this should really be surprising if you watch a lot of these videos. Intermediate term, we're still above the 50. Here's where we're dropping below the 100 simple moving average. We still have the exponential average below us, but things will turn a lot more negative in other areas if we continue to drop from here. The PMO rolling over slightly, looking a little bit more rollover-ish, if that's a word, based on price, and really starting to roll over based on volume. Our PMO study shows that those PMOs that are rising is declining. And then after giving an extreme reading, the buy signals are now declining, but those that are above zero actually advanced, a little flat to advance on Tuesday. Here's where the BPI dropped below 70, and that's what the technical alert picked up. Here's a longer term view of the chart. Here's our rainbow. With the decline, we're going back down into the rainbow. This is also, and I'm not a huge stochastics fan, but this does produce a little more concern. Short term, we're in a decline. Intermediate term, we're now dropping down. And then longer term, we have crossed over negative. So if you're a fan of stochastics, you don't like seeing this. This is more of an across the board switch. Doesn't mean we can't switch back, but right now it's just not looking very positive. Our Sean trend meter also is declining. And then I've been bringing this up because we were showing an extreme reading with the rate of change going back 20 periods. Well, it's still extreme, but did show a decline on Tuesday. The summation index is still advancing based on price, but is now turned down based on volume. And then some of our momentum oscillators are starting to show some weakness. This top one here, this is slope, it has turned negative, where other ones, either they're still going up or starting to weaken more across the board. Vortex, decrease on buying, increase in selling, but still positive overall. RSI turned down, but is still above 50. Sean, excuse me, the Chaikin oscillator, blah, 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 it is still declining after giving an extreme reading, but we're out of extreme positive territory now. So we pretty much have worn off that overbought reading now. And then this one, the Chaikin money flow, it showed an advance. So a little mystifying there. Ultimate oscillator is now declining. As far as our trading systems, we're neutral based on the Elder Impulse system. And then with the spiders, we are also neutral. We're still positive with the SAR. This has more of a not flexibility, more of a pain factor is what I call it. This trading system is really good when we're trending, but it can have huge drawdowns when we go against that trend before it finally decides that we're switching to another direction. Our different charts looking a little more negative with the Heiken Ashi. We're still positive on the Kegi. Renko is still positive because we're bouncing in a real short-term range now. So it's not really picking this up. Our 3-line break is still positive. Equi-volume showed a pretty hefty red candle. No change in the point and figure chart because these are prices that we've been at before. Long term, we're still above the long-term moving average. So that's positive. And here's our logarithmic measurement as well. And then the big boys, they pretty much gave back on Tuesday everything they gained on Monday. So we came right up to this moving average and have now bounced back down from that moving average. Then the special K is still trying to advance. This is a lot slower. This is a longer term oscillator that we look at. So even though it's flattening out a little bit, it continues to advance. Moving average study with our longer term moving averages, declining in the 50, declined a little bit in the 150, and declined a little bit more in the 200. Broad markets. Okay, this is what I wanted to point out. Yeah, we had the decline in the S&P, but the big up day on Monday, we didn't see that in the mid caps, but boy, we sure saw them go down on Tuesday. Same thing with the small caps. They had a pretty significant decline. That could be more negative, at least in the short term. Here's the Dow Jones Composite down over 1%, but we're still above the moving average after just having had a recent death cross. It was trying to come back and give us a golden cross, but we'll have to see if it works out that way. Here's the FANG stocks. Again, a lot of what they gained on Monday, they gave back on Tuesday. ARC A lot of what was gained on Monday was given back on Tuesday. And then here's the Dow, where we broke down below the 200-day moving average, and we've been below that. Well, we're kind of more in a sideways range. It held up a little bit better than the broader market. The diamonds have now switched over to a red bar for the Elder Impulse system. Small caps, they really saw, they were down 2.25%, and they were actually able to drop below the 50-period moving average. And here's the mid caps, not quite at the 50-period moving average, but has now dropped below the pivot. NASDAQ also down, well, about 2.25%, but kind of back within this range that's been building in the short term. And here's the NASDAQ 100. We got right up to the 200-day. That was, at least right now, rejected, and we fell down 2.25%. The Vixen, just love that name. We saw the decline in the NASDAQ 100, and so we saw a corresponding increase with the Vixen. The Elder Impulse system for the Qs is still neutral. NYSE, this is kind of what was giving us some hope here. We had been able to stay above the 200-day moving average. Well, we dropped below that and closed below that on Tuesday. The S&P 100 underperformed the rest of the S&P 500. And this is another one, the Wilshire, which was just above the 200-day moving average, has now dropped below that average. And then China, which has been closed, it still shows that it's advancing, but overall, international markets are still trying to rebound. They haven't picked up the negative action yet that we're seeing in the US markets. All stocks, after coming right up to the moving average, has now declined from that moving average. Then our non-US stocks, they were actually up a little bit. Broad market, the dollar, just, man, you would think the dollar had some real value behind it instead of being a fiat currency. It was up almost 0.5%, and we're getting kind of up to this 100 level. Now, are we going to break through that? Because typically what we're seeing is as the dollar goes up, the euro goes down. And as I usually say, it's going to be real interesting to see if they meet each other. We'll have to see how that plays out. Here's the weekly chart, still showing an overall uptrend with the dollar. Oil declined 1.25%, but it's still above 100. Gold down 1/3% and still kind of working off that fake out that we were dealing with. Here's the gold ETF, also showing 0.2% decline. Here's the longer term view of the gold ETF. Here's gold looking again against the different yield curves. Not a lot of changes here. I'll talk more about this when I get to the chart with the S&P. Silver, it was down over 1% and has now fallen below the 50-period moving average. Here's the longer term view of the gold, or excuse me, the silver ETF. Bitcoin kind of just floundering around in the 40s. It's down more into the mid 40s currently. Bonds, here we go. Inverted yield curve with the 2 to the 10-year yield curve. We're inverted with the 30 to the 5-year yield curve. We're inverted with the, it's hard to see this. Do I have the same chart up here twice? No, this is the 10 to the 5. I'm sorry. The 10 to the 5 is inverted. The 30 to the 5 is inverted. But the 3-month, the 10 to the 3-month, it continues to advance. And then here's the 10-year to the Fed funds rate. It declined a little bit, but is still advancing overall. So here's the S&P compared to all the different yield curves. And again, take your pick. We're seeing a real divergence here. We have 2 yield curves that are going up and other yield curves that have already dropped to being inverted. And then here's where we saw a real spike in interest rates. We're seeing a lot of inversion here as they're all bunched together. But overall, interest rates really rose, except for the 3-month declined a little bit. Internationally, seeing, at least in US yields, a real spike up, but This will redraw since it's a weekly chart. And then with the advance in interest rates, we have seen a corresponding decline in bond prices, and they're starting to break through some of this support. Corporate bonds also decreased based on price. The yield is now at 3.33%. Junk bonds, because the NASDAQ 100 and a lot of the tech stocks declined, junk bonds were down almost 1.25%. Relative studies showing that the gold breakout is just not really happening, even though it advanced slightly on Tuesday. The energy against the S&P, it actually declined a little bit, but is still in an overall uptrend. Then looking at growth against bonds, bonds have been doing worse than growth. And even though growth had a bad day, bonds had an even worse day. And then here's tech against the S&P. We're coming right up to that moving average. We declined a little bit here, but this could be acting as resistance. And then here's tech against bonds, which again, it's not hard to outperform bonds, but tech found a way to do that. We were down, well, 7.62%. My goodness. So tech is really, as interest rates go up, you're going to see tech usually really take a bath when that happens. And then here's the inverse. Here's the 10-year yield really rising with and really outperforming the tech sector. Here's discretionary against staples. We saw discretionary really decline, which means staples advanced. And then here's the S&P compared to the 10-year yield. It's really underperforming interest rates right now. Here's the low volatility. See, they were actually up almost 0.25%. See how that works on a down day? So they showed a little bit of strength where the growth stocks showed more weakness. And here's just the ratio between the two, where it was up 1.5% as far as our ratio is concerned. So what's our outlook then? Technicals are weakening. They haven't switched over negative, but they are getting a lot weaker. The follow-through buying that we needed to see, that didn't happen. In fact, we saw more aggressive selling on Tuesday. So the markets are still in this intermediate term range. We're still battling between growth and value. The yield curve is still having a lot of people mystified about things. Oil, that whole scenario that I've been talking about lately with prices at the pump really going up, letting out the reserves, what are the ramifications of that going to be? And then the supply chain issues. That's what they're using as justification for rising prices a lot now. And some of that can be traced back to China because they're going through another phase of lockdowns. The big economic report coming out, FOMC meeting minutes, about 2 p.m. or so Eastern time is when they'll be released. They like to read secret meanings into this, try to figure out who voted for what, and that can end up moving the markets as we get closer to the close. And then all the geopolitical events, Russia, Ukraine, there might be more sanctions that they're going to roll out against Russia. There's still these really nasty stories coming about how civilians are being treated in Ukraine. We still have China with the supply chain issues because of their lockdowns, the yield curves, oil. These are hefty things that the market is trying to digest. So it's probably not a surprise that we're seeing a decline in volume. People don't want to take a huge chunk of money and put it at risk right now. Because look at how the change was from Monday to Tuesday. You know, growth was all the love, tech stocks, everybody was loving them. Tuesday, it's like they were taken out and shot. So, okay, so let's look at our scenarios. The A scenario is kind of what I have been looking, but this is pretty much gone now with the short-term overbought and resistance. That's what we might have been bumping into, but we've gotten beyond that now. And a lot of our, at least short-term indicators have worn off their overbought readings and they're now declining. They're still positive, but declining. Scenario B is pretty much what played out on Tuesday. We saw rising interest rates, and of course, that comes along with yield curve concerns. And if we see interest rates really start to go up, that may produce some more pressure on stocks. The inverse of that is also true. Then the internals and the broader market areas are not showing strength. In fact, they're showing more weakness right now. So these are some different scenarios as to why the market can go down. Looking if we have a positive day. The oscillators are still positive, most of them, but they are weakening. The moving averages, they could be providing some support, but they're also providing resistance if we try to go up. So that's, we're kind of hitting some headwinds right now as far as the upward move. Now it could all change. We could have a really solid up day and that could change the picture. We just have to go with what we're seeing right now. And now number 3 is kind of coming back more into play, where we might get into a sideways market for a while. We're seeing a decrease in volume. We're in this range. We're bouncing up one day and then coming back down the next. So the intermediate term range, as long as we see these wild swings, we won't see the ADX really decline all that much, but we're starting to see that anyway, because the ADX continues to weaken. If that happens, we could go into price movement where it really slows down and we get more into a sideways trendless environment. So what's our conclusion? The S&P is positive, but showing some short-term weakness. Our short-term look is we're positive, but weakening, and we're lacking any broad-based strength right now. Intermediate term is still positive, but our oscillators are weakening. Our moving averages, if they break through support, that could be more negative. If we're trying to go up, we could hit some resistance, especially in some of the other indexes. And then, but long term, we are still positive because we are still above the 200-day simple moving average. And then here again is a list. I have new people watching the videos all the time. I just want to make a list available. The asterisk here is because these are videos that I intend to do, but have not been able to post yet. So thank you. Have a very good Wednesday, and I will prepare the next video after the market closes.